Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, January 29th. We are looking at the SPY ETF's market profile here on Window Trader. A lot to get to. I'm going to recap the month, what we're looking forward to going forward for both the SPY, ES, IWM, and Triple Qs. Interesting day today. Had a very good day. We saw the market pretty good today and traded pretty good. Could have had an incredible home run in M period. I did well in M period, but not as well as I should have done because I actually nailed it on the head, what I thought was going to happen. I'm going to go over the Russell and the Triple Qs first on this profile before we get into detail on the SPY. So Russell had an inside day yesterday. They came out of it briefly in F period. This is amazing what transpired here. They came out of it briefly in E period, barely, or they might not have. We had a very big reversal in F in all three indices, which is pretty rare. When you stop the one-time framing, you didn't have single prints. Pretty rare how it reversed, and not only reversed hard. And then they came out of the inside day to the downside and blew through this 8-day balance to the downside and finished below it. Now, we all filled out single prints. Believe it or not, there's no trend day down in any of the indices, and we're 8 wide in all of them. But if the question is, there was definitely some long-term selling here today when F reversed. Just like the other day when they had to raise some cash based on what happened in GME and probably a bunch of other stocks. I'm not surprised if that's what happened again today in F, and again late in the day. Now the question is, is that all it is? There's definitely some damage on the charts. We had an outside week down in both the IWM, Russell, SPY, and ES. So some damage has been done, which we'll go over. Triple Qs, basically a spitting image of us again today. As they fill their gap. Now, Russell did not gap lower. They opened inside value, inside balance. We gapped lower in both the SPY and the Triple Qs. Triple Qs did not have a big gap, and they filled it. They end 8 wide. It says 9, but that's N, which I don't count. And they're flushing out. Kind of looking like B shapes, but kind of, I don't like the A not being the top part of it, but kind of a B shape. And then in SPY and ES, we gapped. It was a small gap. I missed that trade. I missed that short because we were talking to somebody in the room. We opened. You talk about great risk reward. Well, it opened, held the gap by a little bit, and just ran right down. So I did not get that one right away, but I did get a short. I traded today's expiration. I did do it around half back, what half back was at the time, and it worked. I did the what did I write? 375 calls or 378. I'm not sure if I took the 375 or the 378 calls. I wrote down both of them. But anyway, that trade, oh, there it was. I'm sorry. It was neither. It was a 376 puts. I'm saying calls. Excuse me. It's a long day. It's been a long week. Been a crazy week. I took the 376 puts, and it worked out in A period. Then in B, when we took out the day's high, I didn't do it right away. I said, I really don't expect a trend day. And in fact, I looked, if it had gone a little higher, I was going to take a short against B&M's low. Remember from yesterday? I said now yes, we're one-time framing up, so something had changed, but we still had lower value. We filled the gap. I'm like, the market was short. The market was short from yesterday afternoon, the overnight, and then A ran right down. So there was no inventory adjustment. So when it came back up and B took out A, I'm like, this is probably just an inventory adjustment. So I would have taken a short against there, but it never got there. When it did come back in, though, I did take a long against the opening. And I said, if it gets below the opening, I'm out. And it did, and I took a small loss on it, 375 calls. Then in C period, I did take a short. I took the 377 puts. After, again, it came back in, couldn't get, took out, we had single prints. It took out B's high. And then came in, filled the singles, and got below the open. I took a put play, and I made on those at 377 puts. I took a small long in D against the day's low, the 373s, and it actually worked out before it took out A's low. Now, change took place below A's low, and then again in F. E takes out A's low, I got short. Took the 375 puts. Went down. Came back. It came back up. I had decent size. Turned out to be a really, really nice trade in E period. F opened with single prints. Went up. Filled the single prints. I'm like, wow. I'm like, okay. I had a short. Actually, I had a short, and I did okay on it. No, I'm sorry. I did not have a short in F. I apologize. So I made money on the E. F came up, and I'm like, wow, if we take out E's high, we're going to fill those singles. They're not big. And is that all they wanted? Is all they wanted to do was dip below the 2-day balance low and get back into the day's range? Now, I was not taking a long at F's high when we took out E. I was looking for F to go up for an afternoon rally high. Well, obviously, it is our afternoon rally high, but I never dreamed that it would reverse that hard and we would never see it again. And it flushed, and it flushed hard. Now, I did not do anything in F, but I did take shorts in G a bunch of times when it was running down, when it came back up into F, scalped the 372 puts a bunch of times and did well on them. Then in J period, I was looking for the single prints to fill. I took a 370 call. It didn't fill, but I still made out on them. We were getting some really big ranges. Really big ranges. So I was being very careful. I wasn't buying them up here. Every time Jay would pull back around POC, I took the long to see if we'd go back up and get the singles. Well, we never got them, but I did okay. Then I had some really good shorts in L and M. I took a short against half back. We filled the single prints. I took a short at half back. It stopped there on a dime and came in. Nice trade. Went up above half back. I said, well, here's my line in the sand. This is where change took place today. A's low, F's high. If we get above there, then the sellers did nothing. Well, that short and L worked out. Now, here's a trade where I should have absolutely hit a grand slam on, not just a home run. I did well, but not what I should have. M took out L's high, and I took a short. I said, if it gets above F's high, I'm going to be something changed there. Never did. Missed it by only 6 cents, but it didn't get it. And it came in, and it started coming in hard. But I thought, I only had 20. I took some off at POC, took the rest off when we got down to Wednesday's low, and then I got flat between Wednesday's low and J's high. Then I said, you know what? Why am I flat? We're going to go get the POC, and I said the odds of a reversal bar are good. So I did get back in again, but nothing big. And we did go down and get POC and have a reversal bar, and I flattened out. Now, I didn't flatten out at the low because when we had the initial reversal bar, it didn't take it out by much. I certainly missed a huge opportunity. It gave us an opportunity to reshort it. It went back up to $372.50 and came off $2 in 2 minutes, but I never reshorted it. So what I'm talking about with the home run or grand slam, I'm not even talking about that. Here's the grand slam. Here is a risk reward. It did exactly what I thought it would do. Looked above L's high and came in. Instead of a 20 lot, that should have been a 100 put play. Out immediately above F's high. Because if I did 100, you take 20 off at half back, 20 off at Wednesday's low, 20 off at J's high, 20 off at POC, 20 off on a reversal bar. That's something I need to work on. Now, I did well on the 20 I bought. I did 5, yeah, right? And I did well on the other 20 I bought, again, when I came up a little bit and I got what I was looking for. But those are things I need to work on. Remember, When you think you have it all down, that's the day to give up trading. Destinations for Monday. And let me tell you, this should be fun again. Upside. Guess what? We have the afternoon rally high of 373.24, which is F's high. Now we close. Where do they have us closing? Oh, wow. 370.07. Wow, that's amazing the way it pushed down. So our first destination is over $3 away. Don't forget, we battled the 50-day moving average all day. And I'll go over that on the charts. We closed below it, but we'll go over that. So 373.24, M's high. F's high, afternoon rally high. Then we don't have anything to 376.67, today's high. And then 381.93 daily high, and filling that gap at 383.54, 160-point gap. Downside, today's low. It's a weekly low now, 368.27. Then we have a daily low of 368.05, and then things get very, very precarious for the bulls. 364.82. Monthly low. That's this month's low, right? That's this month's low now. Yes, it is. 364.82 is not a weekly low, monthly low. And then 362.03, monthly low. Now let's go to the charts. We'll start with SPY. The monthly is one time frame and up for 3 months. It's healthy. We're way inside now, right? Remember I said last month's high of 374.66 would be nice to close above? Well, we're $4 in it. But it's still healthy. One time frame and up. Here's where the big issue is. Weekly. We had an outside week down. The next target on the weekly is 364.82, which is now this month's low. I firmly believe we should go, if not take it out, at least test it. If we take it out, then the previous month's low of 362.03 will probably get taken out too. That's how I'm looking at the monthly. So if we get any rally next week, I'm looking to short this thing below last week's low of 376.75. Now, we did have an outside week up 4 weeks ago, and we didn't get much out of it. We had an inside week, and then we got something out of it. So there's no guarantee next week we're just going to, dump $10. But it is negative. So it's something to keep in mind. And then the daily, again, one day doesn't make a market. Did we close above below the 50-day moving average? Yes. But somebody pointed out in my room, the last time we went through the 50, we went back and forth through it for 2 months. Look at this. Got below it, above it, below it, and then it took till November to finally get acceptance above it again and then rip to all-time highs. So we might battle this area. We might go down pretty good below it, but we might not give it up so easily the first time. So we'll see. The last time we closed below it, the first time, was September 18th. Now the next day, look, we pushed below it pretty good, and actually that whole week, the whole following week, we stayed below it. And even the next week, we battled it before we got above it. So we'll see what transpires. Again, I would not be surprised if we test some monthly lows coming up. Russell. Everybody was shorting the Russell forever and getting killed. Is it time to short it? Well, let's look. Monthly. One time framing up for 3 months out of an inside month. And we're still above even the previous month's high. That's pretty good. Is there excess up there? Possibly. But monthly's healthy. Now here's the damage in the weekly. But there's a little difference that I'm seeing from us. Now they did have an outside week down. But look at from 3 weeks ago. The low is 204.83. This week's low is 204.84. You can't make that stuff up. That's a target. So last week's low is 209.55. So again, any kind of rally, I want to be short below the previous week's low since it's an outside week down and see if we fail again. And then see if we come and get this. If you do take out this week's low and that other week low, which is a big target, well, if you get acceptance below there, you know what your next daily weekly destination is? 191. So for everybody that was going crazy, getting destroyed short in the Russell on the way up, this is market-generated information. Now you have something to really lean on. If it rallies, you can get short around the 209 level, out above 210, say, and see if we come down and take out this week's low. If we don't rally and we take out this week's low, well, then that's a really nice short. You know you're out. If you get back inside last week's range, or meaning this week's range, you get out. If not, guess what? You know what your destination is? Eventually, 191. That's a pretty good risk-reward trade, isn't it? So that's what I'm trying to say. And on the daily, they came out of an inside day to the downside, one time framing down. We had 2 inside days in it now out of the last 4. Went down afterwards, went down afterwards. So again, this level, that 204.83, I'm sorry, what did I say? 208. So if we take out today's low at some point, here's your pit stops. That daily low of 199.16. I'm telling you, at some point you're going to go test somewhere between the 199 level, and then again, if you fill that gap, the 191 level. That's what I would be looking for. And their 50-day moving average is 196.56. So that's market-generated information for next week to take a short in Russell on both the weekly and the daily. Now, I know this is long, but it's the end of the month. I think it's, I hope for those of you who watch it, you watch it for a reason, so I hope it helps. One time framing up on the triple Qs for 2 months. Still healthy. Weekly. They did not have an outside week down. They took out last week's low. They took out last week's low was 313.12. This week's low is 312.76. And we closed at 314.56. So it's not an outside week down. But I will tell you this. Those 2 weekly lows are pretty close together. So again, that becomes a target. But it's not an outside week down. So they are firmly in balance. So now we'll see what happens at this week's low. If you get below it, well, now you just came out of a 2-week balance to the downside. Here come your targets. 305 is the first one, and then the next big one I would look at is probably around, look at that, 288. So you can get some acceleration to the downside in all these indices if this market-generated information pans out and real sellers, show up. And then on the daily, they didn't even touch their 50-day. So there's a good chance we'll test that next week, which was 309.01. This is the last weekend for $20 a month. For what you get for that price is just absurd. Ask anybody in my trading room. Be my guest. Starting Monday, it's $30 a month, which is still cheap. So come check us out at camelbacktrading.org. Have a great weekend, and we'll speak prior to the opening on Monday.